Good evening and a very warm welcome to all our viewers to the 30th edition of Cedrus Knowledge Series. This knowledge series was an initiative which we started with an objective of inviting one investor and one speaker each month, speaking on a variety of topics ranging not just finance but also personal well being. We'll now play a short video of Cedrus Wealth Partners. With all the buzz around the private equity investments, I'm sure we all have a lot of questions about the startup ecosystem. Let us get all these questions answered by none other than Mr. Rajesh Sehgal, Managing Partner at Equanimity Ventures. A very warm welcome, sir. We'll now play a short video to further introduce him. It's an absolute honor to have you with us today, sir. And I'm sure we
Thank
all
you.
are looking forward to your views on the startup ecosystem. For all our viewers, this is a moderated session where we will ask our set of questions to Mr. Sehgal. And if you all have any questions, you all can post them in the comment section. We will take them towards the end of the discussion. Now I would like to hand it over to Mr. Nilesh Bajaj for taking the discussion forward. Over to you, Nilesh, sir.
Thank you, Unnati, for the lovely introduction. Uh, Good evening, Rajesh, and good evening, all our viewers. Uh, I think I've seen a lot of interest getting generated, especially among our HNI investors, uh, in the private capital space. To say, in the recent past, they have tested their waters in plain vanilla investments like mutual funds, direct equities. You have invested in fixed income, real estate. As a diversification, a lot of interest is getting generated in this space of private capital. Uh, we have seen assets, we have seen a number of funds which have come out with alternative investment options, as well as there are co-investment opportunities which are there. Uh, Unfortunately, the knowledge is somewhere where we see there has been lack of knowledge before people actually invest in these kind of products, which are quite complex. So this knowledge series, I actually thought, why not have a session with Rajesh? Rajesh has been in this industry since more than 2 decades now, and I think he's one of the best persons to address all the queries which we at Cedrus also have around venture capital and private equity investments. So Rajesh,
Hi, Nilesh. Thanks for having
hi.
me. Thanks.
Yeah, our pleasure, sir. So Rajesh, how does this VC investment? How do they work actually? That is the uh, key thing. I guess, is it accessible to everyone, and what kind of investors can invest. Could you take us through this complete journey of when anyone wants to invest in the venture capital space or private capital space? Uh, how could you enlighten our viewers on the same?
Sure. Yeah, I think for this, let's invoke a little bit of history, if you don't mind. For participants in the market who've been around for a while, I'll take you back to the 1980s. When the Indian stock market, there was no NSE, there was no SEBI, by the way, at that time. So when I say Indian stock market, it was largely some regional stock exchanges and the Bombay Stock Exchange. And I think that is where the culture of investing in equity actually flourished. It was born and flourished because companies like Reliance, etc., made it accessible to the common man to actually go to the market with a few hundred rupees and become an investor. And that is where the middle class in India and the little not super rich but the little rich people started participating in markets. And what is happening today in the private markets, private equity, venture capital, these kind of investments is very akin to what happened in the 80s in the stock markets in India. And that is where when I look back, I see so many similarities there. So for one, retail investors, whether they are large retail investors or small retail investors, I think safe to say that today they've actually drawn a kind of attraction to private investments. There's a buzzword now around called startups. Everybody wants to have a piece of the startup, whatever that is. uh, Similar to what in the 80s was equity. Everybody wanted to have a piece of equity market क्योंकि उससे पैसा बनता है. That was the thing. Whether one way or the other, we've all realized that the stock markets in India have really delivered, and everybody who invested in those years has made true wealth if if you stayed around and invested. And I think that is where the similarity between the listed markets and the private markets in India ends. Because the private markets, because there is no regulator, because there is no one agency, there is no one any self-regulating organization, no SRO. So therefore, it's far more opaque. That has its own pluses and minuses, and I think the purpose of this conversation is not to belabor theoretical points, but I think practically speaking, to answer your question, Nilesh, the easiest way to access early stage companies, startups, is to become part of some angel networks. And I think in India today you have at least 5 6 large angel networks which have been around for more than 8 10 years. So there is track record, there is history, all of that. And more importantly, there's always a friend of ours who's part of some network, so we can get access to that network. So I think that is step one. That is the easiest way to be participating in the early stage ecosystem. But mind you, that is also a very risky way of participating in the early stage ecosystem, because like we all come from the stock markets, we all know that we all have to build a portfolio, because there is something called as risk when you invest, and that risk needs to be diversified. Similarly, when you're investing in early stage startups, there is risk that you're assuming. And by the way, the risks in smaller businesses, early stage businesses, it far outweighs the risk that you have in the listed markets. So the need to diversify here in the early stage ecosystem is far more. It's even more serious. The other way to participate in early stage companies is to invest in funds like ours. So I think SEBI has a set of guidelines that has been around since 2012. So these are time-tested guidelines, regulations, etc. Funds like ours are all registered with SEBI. So there's far more structure, institutional setup, and kind of risk mitigation and risk management processes that are in place when you participate investing in early stage in companies, businesses through funds like ours. The jury is still out. It's like the mutual fund industry. The jury is still out whether वो mutual fund में पैसा बनता है कि नहीं बनता है. For
Hmm.
people who tasted wealth via mutual funds will swear that mutual funds can deliver wealth. People who lost money participating in that vehicle will say, अरे ये तो पैसा बनता नहीं, खाली फीस बनता है fund manager का. So the jury is still out for funds like ours as well. But I think on balance, if you look at the global examples, US, UK, Israel, China, Japan, all these, Korea. These are very well structured private markets, and the results have been fantastic, have been fabulous. So
Hmm.
Nilesh, I hope that answers your question. You can either invest through some angel networks, or you have a friend who's starting something, or my friend's son is starting something, and you get access to it, or you
Hmm.
get into funds like structured funds like ours, and say, okay, you know what, I'm going to be an investor, and you're the fund manager, and you manage this risk for us.
Yeah, so but Rajesh, in fact, point taken. We can start with small amounts with, through these angel networks or through some family friend, or someone who is actually investing together. But it's a very crude way of investing. That's what I guess. The risk attached is also going to be very high.
Yeah,
Second thing is, what I've seen is the kind of investors who are co-investing are typically successful entrepreneurs in the similar industry. They've done well.
right,
They want to see more startups grow and do well like themselves. And
right.
these are the kind of people who have already been successful in their own businesses, who have actually who are looking forward to invest or co-invest in these kind of opportunities. But
Right.
then, is it for a select audience, or can a broader audience also invest?
Yeah.
Because I'm sure the risk attached with this kind of an investment, is much higher compared to any other asset class. But the returns also come that way, in fact.
Yes. Oh, yeah. The returns are fantastic as well. So I think this is an important point, Nilesh. It's about what is the risk, how do we manage it, what are co-investments, who are these co-investors, and why do they end up investing in quite a few companies, and how people can, you and me, us investors, get access to those companies. So I think one of the big difference between listed markets and private markets is that in private markets, you have to really go hunting for deals. There is
Hmm.
no main board, there is no stock exchange where everything is listed, everything has a price. All you have to do is figure out which one, and how much. I think in the
Hmm.
private market you have to figure out which one and how much, but it's all opaque. There's no market for it, and I think therein lies the challenge. Also, I think you made a very valid point saying that these co-investors are typically founders of companies that have become successful. So, for example, founders of Paytm or Nika, or I mean any of the larger companies, name them. They've invested their own money in a lot of these startups. So I think the first thing that we have to remember and learn by not by listening to them but by seeing what they do is that all these people have created a portfolio of a lot of companies, and which alludes to my earlier point that there needs to be diversification. You cannot get into मैंने दो startup में पैसा डाल दिया है, मैंने पांच में डाल दिया है, and think that you are part of that ecosystem. It just means that you've taken inordinate amount of risk and you have no bloody idea whether you will make money on it or not. So I
Yes.
think that's the first point. Now, the other big difference between public markets and private markets is the value addition to businesses. And what I mean by this is, you and I can go to the stock market tomorrow, on Monday, and buy some few shares in Reliance. As large a company as Reliance, or as a very small company. Pick a name. Very small cap, micro cap company. uh, but our role will finish there. We'll buy the stock. We have no other thing to contribute or do with the company except
Hmm.
monitor our investment, right? That's at our end. But in the private markets, you have to first identify companies, invest in them. Before you invest, because there is no market, you have to actually have conversations with the founders of these companies that you want to invest, whether they want to take your money or not.
Hmm.
And then I think the real journey starts after that, because here you have to help these founders actually build those businesses. Because of business hai nahi abhi tak, abhi startup hai. It's a new business. It has too
Hmm.
many variables, too many things that need to be managed. The founders of these companies are, वो सीईओ भी खुद है, सीटीओ भी खुद है, सीएक्सओ भी खुद है, सीएफओ भी खुद ही है, सेक्रेटरी भी खुद है, प्यून भी खुद है. You have to do everything as a startup, which means you are part of so many decisions on a daily basis. And we are all
Hmm.
humans, right? None of us are superhumans, and therefore starting a company and making it grow is so much more challenging. That is where the role of these co-investors or funds like ours comes in, where we not only give them money, but we actually work with those founders and businesses to really build the business, to take
Hmm.
those decisions, help them take those decisions that will steer the company in the right direction.
Hmm. Wonderful. I think I'm sure our audiences got this clear as to how to at least approach this space of private capital. Uh, how do you? What is the process of evaluating startups? Because you have successfully been running the fund on venture capital investments and startups. Could you just take the audience through the process of evaluating startups?
Sure. So I think the process of evaluating startups, in a sense, is pretty similar to evaluating listed companies.
Hmm.
Ultimately, it's about whether that business is going to become a success or not. Right?
Hmm.
The difference is in the stage, and I think for to make it very simple, just we need to think of a life cycle of a business. Every
Hmm.
business, including the example that I took earlier of Reliance, which is a very large company, or Infosys or Wipro, any company, there was one day in their life when they were born. Somebody said,
Hmm.
"Let's start this business." So they were a startup on that day, right?
Hmm.
And then that business has got scaled up, right?
Hmm.
Uh, we don't realize that journey as investors today. We have no
Hmm.
idea what Dhirubhai Ambani's challenges were, or Narayan Murthy and team, their challenges were when they were starting off, राइट?
True.
फिर वो लोग एक किताब लिखेगा, उसमें हम लोग पढ़ेंगे, अच्छा ये जर्नी था, वो देन यू अंडरस्टैंड, अच्छा एचडीएफसी बैंक ऐसे बना था, रिलायंस ऐसे बना था, राइट? बट दोज आर
Uh,
डेली challenges, right?
hmm.
So I think what one needs to do as an investor is to, in the early stage, because there is no history, there is no 5-year track record, 10-year track record of these companies.
Hmm.
There is no diligence that you can do, because most of these companies don't have annual reports. There is very limited financial information available. So I think
Hmm.
the bulk of the focus of our analysis on these companies is restricted to two things. One is the people involved, the
Hmm.
founder, the founding team, what is the structure, hierarchy, how are they operating, who's doing what, etc., and their capabilities. So it's all about the people. Okay, Mr.
Hmm.
X is the founder. Now, what is his capability? He's going to build a large fintech company. Awesome, excellent. But does he
Hmm.
have the requisite skills to not only
Hmm.
understand the business landscape, but also to have a plan and then have the ability of executing that plan? So that takes a
Hmm.
very different skill set as an investor when you're
Hmm.
evaluating an HDFC Bank, which is a large, tech savvy bank listed in the markets, versus a fintech company that is just starting off. You're trying to evaluate both these companies, which are going to ultimately address the same market, but their life cycle stage is so different that the way they will grow in their businesses is poles apart. As an investor,
Hmm.
do we have the ability of understanding the challenges of building a business from scratch? So that is the first
Hmm.
question. The second question on which we evaluate, by the way, there are hundreds of questions that we ask companies, but I'm just giving you two very critical areas where questions are mostly concentrated. So
Hmm.
the second area where we ask them a lot of questions and try to understand and build our thesis and our confidence in those companies is actually
Hmm.
about the business landscape.
Hmm.
Please remember that most of these startups are addressing a space that is very nascent, that is still not existing. It is not
Hmm.
that 50 बैंक लिस्टेड है, अभी और एक बंदा आया है, उससे बोला मैं भी एक बैंक चालू कर रहा हूँ. इट्स नॉट द
Hmm.
51st बैंक, और इट्स नॉट द 51st कंज्यूमर कंपनी. यूनिलीवर है, आईटीसी है, सब लोग ये कर रहे हैं, मैं भी ये कर रहा हूँ. सो इज नॉट अ मी टू. These are guys who are really innovative in their mindset. These are guys who are using technology to really scale up their businesses. So these are
Hmm.
people, these are small businesses that are going to disrupt. And I use this word very carefully because a lot of people
Hmm.
nowadays are using this disrupt word very in every context. But I think in
True.
the true sense of the word, these are the founders
Hmm.
and visionaries who are going to disrupt the industries that they're targeting. Now,
Hmm.
that, so it's a very big challenge for them. But as
Hmm.
investors in startups, it becomes a very big challenge for us. दैट
Hmm.
उसका विजन हमारे समझ में आ रहा है कि नहीं आ रहा है. वो बोल रहा है
Hmm.
ऐसा हो जाएगा, राइट?
Hmm.
You not seen that. Nobody seen this because this is all new. It's all blue
Hmm.
skies. So as an
Hmm.
investor, do we have a very good understanding of the lay of the land to
Hmm.
make a judgment call कि यार ये बंदा है, इसका ये बैकग्राउंड है, इसका ये प्लान है, ये इसका ये टीम है, ये करेगा, ऐसे ऐसे करेगा, बट ये जो अपॉर्चुनिटी है, इट्स एक्चुअली रियल.
Hmm.
If he is actually able to do A, B, C, D, and E that he's saying, this can really be a $1 billion business. Right now, whether
Hmm.
that happens or not happens, whether your call was right, wrong, are all secondary. But I think initially, to answer your question, as
Hmm.
investors, you have to have the ability to judge based on your experience and your understanding of how industries are being disrupted or can be disrupted.
Okay. Wonderful. Uh, I think but why can't someone like a normal investor, just this you have answered, but why can't an investor straight away go and invest? I think the reason to it, what you mentioned, is that it is a risky proposition. Anyone who wants to invest in startups, they are going to be quite risky, and they need to go through a fund. You're running a successful fund. Could you take us through, what your fund is doing? What are the opportunities? How can our investors or our audience participate
Right. Right.
uh, uh, in a more structured way through economity?
Yeah. So I think uh, let's take a step back. If you allow me, I have a very short presentation here,
Hmm.
which is not on the fund, but it is more on
Hmm.
the startup landscape. कि वो दुनिया में हो क्या रहा है? And then I'll
Right.
come back to our fund and share a little bit on what we've done so far, what we plan to do, how we are navigating this
Hmm.
whole ecosystem, right? So let me just pull this
Absolutely.
up.
Hmm.
Are you able to see the slide?
Yeah, yeah, absolutely.
Excellent, excellent. So here's the Indian startup story. Even we all know that India is now the third largest startup ecosystem in the world, and this was very proudly, stated by our Prime Minister as well last month in one of his
Hmm.
speeches. And I think the good news is that this ecosystem is expected to keep growing at a very robust rate. As a whole ecosystem. Uh, and I think it's also important because we all know, having grown up in this country, that the backbone of this country is not actually the large businesses; they are the smaller businesses. The
True.
SMEs, the small businesses that we people in Mumbai, Pune, etc., etc., all over the country, we are running those businesses, and I think
Right.
that is where wealth gets created, that is where jobs get created, etc. So the startup
Hmm.
ecosystem has its own positive has had its own positive contribution to job creation
Hmm.
as well as wealth creation.
Hmm.
वेल्थ क्रिएशन
Right.
हम सबको दिखता है कि अरे उसने इतना पैसा बना लिया, उसने इतना पैसा बना लिया, बट जॉब क्रिएशन वी
Hmm.
डोंट रियली फोकस ऑन, बट आई थिंक देव डन अ वेरी रीजनेबल जॉब, वेरी गुड जॉब of creating employment.
Hmm.
And of course, there's this word that all of us are familiar with, which is unicorn.
Hmm.
Unicorns are businesses that have more than $1 billion of valuation at a certain point in time. Uh,
Hmm.
Unfortunately, these companies are all not listed, so that unicorn status is a big
Hmm.
question mark, because you and I or the entire market is not giving them that price. It is just a private transaction where they've got that price.
True.
But for good or bad, we India crossed more than 100 unicorns last year, and
Hmm.
not many of them have slipped back. So we still have a lot of unicorns in India, companies that have really made huge wealth, created wealth. Uh,
Hmm.
and I think it befits to share that since the markets have taken a downturn after 21,
Hmm.
especially the private markets, it's been a funding winter, the term that again everybody uses now, and I think this funding winter is real.
Hmm.
The reason for that is actually very simple. If you look at data over the last 10 years,
Hmm.
86 to 87% of investments into the startup ecosystem has been made by foreign funds, not
Hmm.
not domestic. Domestic में हमारे पास पैसा ही नहीं है ना, भारत गरीब देश है. So we don't have as much capital, right?
Hmm.
Uh, uh, and because of the problems that they have faced, in the US, interest rates have gone up from nearly 0% to now nearly 5%, and still expected to move up, etc. And similar in many other geographies. I think a lot of capital is moved back into dollars into the US,
Hmm.
and therefore we find ourselves bereft of capital. There's very little capital to go around, and this macroeconomic headwind is real, and it's here to stay. I think it's
Hmm.
anybody's guess for how long, etc., etc. A lot of pundits have, last year projected that this year things will be good. Things are really not good so far. It's far better than it was last year, but still not great.
Hmm.
Uh,
True.
uh, but I think the takeaway for me from this whole funding winter and headwinds, etc., is that like in the public markets, this is the
Hmm.
best time to invest, right? Because things are not looking good, valuations are down, demands of promoters, founders are very reasonable. You're able to find, as funds or as investors, you and I are able to find very good investment opportunities run by very capable people at very reasonable valuations. वो combination जो है, which according to us in the public markets is a no brainer. यही time है, इसमें डालो पैसा. So this is the opportunity. This is where we are in that cycle. That's how we are looking at it.
Mm-hmm.
Uh, I just shared with you that we are the third largest startup ecosystem. We crossed a number of 100 one and a half years back. Now we are at 86. Still pretty good, by the way. And there's some
Mm-hmm.
statistics here on the left hand side. By the way, Nilesh, we can share this deck, so people don't need to really remember or take notes, etc. It's
Absolutely.
just to help
Yeah.
our conversation.
Mm-hmm.
This is what is happening in the ecosystem overall. On the right hand side, there's a pie chart that gives you the very simple information that fintech is actually
Mm-hmm.
roughly 45% of the
Mm-hmm.
overall dollars raised in the ecosystem. And
Mm-hmm.
rightly so, because bank BFSI, where fintechs come from and where they are dealing with, is such a large part of our economy. Especially the
Mm-hmm.
digital economy.
Mm-hmm.
E-commerce is second, right? And enterprise tech is third. These are all, the companies that are selling to you and me, B2C, or enterprise tech, which is B2B. And these
Mm-hmm.
are obviously larger markets. So as a fund, when we go into the markets to deploy our capital, we also have a pipeline and deal flow, which is very representative of what's happening in the broader ecosystem.
Mm-hmm.
Uh, Again, this is another interesting chart.
Mm-hmm.
Reminds us of a conversation that is very topical today, where a
Mm-hmm.
lot of these, because of the funding winter, a lot of the funds have started asking companies to focus
Mm-hmm.
more on profitability rather than growth.
Right.
It starts with listed companies as well. You must have heard commentaries from Paytm, Zomato, all these listed guys who are saying, "Arey, we are heading towards profitability. Agle quarter
Right.
mein ho jayega, teen quarter mein ho jayega," all of that. So that's not
Mm-hmm.
limited to listed players, by the way. In our private market also, that's the theme. And
Mm-hmm.
as you can clearly see, this is a 6-7 year chart. You
Mm.
can clearly see that there was a premium to growth, and
Right.
nobody was looking at profitability till 22. And in
Mm.
23, you see the switch.
Mm-hmm.
Everybody's talking of, including us, by the way. We've been talking of profitability all through because we have that mindset. But
Right.
but larger investors also have started saying, "अरे
Mm.
profitability पे ध्यान दो, growth बाद में आ जाएगा."
No more
जिंदा
cash burn. No
हाँ
more
कैश
cash
बर्न
burn.
नहीं करो, जिंदा रहेंगे तो ग्रोथ आएगा ना बाद में पर लेट्स फोकस on
Uh,
reducing the cash burn, making profits, etc. So this, I
right.
think, is a big trend and is here to stay.
Mm-hmm.
The regulatory environment actually has been a huge enabler for the ecosystem so far. Despite all the
Mm-hmm.
complaints that people have, angel tax aa gaya, ye aa gaya, ho gaya. Of course, those are
Mm-hmm.
problems. I mean, nobody wants to be paying tax on things that we feel is helping the nation grow and therefore should not be taxed. We should not be punished for making businesses grow and jobs growth and all of that.
Mm-hmm.
I mean, there are reasons on both sides of the fence, but I think overall, if you look at the regulatory environment, it's been very supportive of the overall ecosystem. And
Mm-hmm.
I think the government will do well if they keep
Mm-hmm.
focusing on making sure that people who are supporting the ecosystem, are not taxed unnecessarily. And those
Right.
conversations are on. We as a industry body have represented to the government. They are very receptive to the idea, by the way. Of course, it takes
Mm-hmm.
time for good or for bad. This is an ecosystem which is not a very straightforward, simple listed market ecosystem. It has its own nuances and complexities.
Mm-hmm.
So the bureaucrats, decision makers, etc., have to first get their arms around understanding के इसका पूरा impact क्या है.
Mm-hmm.
It's not an easy asset class. So for them, it's a new asset class for them. So I
Right.
think it'll be sorted as well. But overall, the regulatory environment remains pretty supportive of what we are doing.
Mm-hmm.
Investors' perspective, I already shared with you that there's a huge emphasis now on profitability rather than
Mm-hmm.
just growth. And there's a whole conversation shift, complete shift. Same people, if you would have spoken to them 2 3 years back, if you speak to them today, it's a whole different language. Like, अरे ये तो बहुत ही अलग बात कर रहा था, आज बहुत ही अलग बात हो रही है.
But
So
are these
everybody.
domestic investors or are these investors who have or foreign investors? Where the problem lies actually.
So I think it is all of them. You can't blame one
Okay.
or the other. It's just all of us.
Mm-hmm.
See, the problem,
Mm-hmm.
the difference in the problem is that domestic investors never had hundreds of millions of dollars to give to one company.
True.
तो
True.
हम लोग के जो इन्वेस्टमेंट है हम लोग छोटा छोटा इन्वेस्टमेंट करते हैं,
Yeah.
right? But the larger investors, all global investors, they come in because they have bigger checkbooks, bigger check sizes. They invest 50 100 million dollars in one shot. But
Mm-hmm.
problem तो same है, खाली उसका scale अलग है.
Okay. Okay.
Great. So of course, there's some nuance within the startup ecosystem as well, and I think this is very important to understand. That's why I thought I should share this slide. When we look at private markets in the venture capital space,
Hmm.
we tend to brush everybody with the same brush, but वो सही नहीं है. Like listed
Hmm.
markets में, the performance of micro caps is
Yeah.
or the way you look at it, the way what's happening there, what will
Hmm.
impact them, etc., is very different than the same policy change or same news for a large cap stocks. They
True.
move very differently. So to just
Hmm.
say markets today were up, it doesn't mean that everything was up. It means that
Hmm.
on an average everything was up. So similarly, on the
Hmm.
private market side, we have to remember that there are two distinct sectors within the startup ecosystem. One is
Hmm.
truly early stage, and one is late stage. Right.
Hmm.
So what I mean by that very simply is that
Hmm.
companies like Zomato, Paytm, Nike, all these guys just before listing, right? They were the
Hmm.
late stage companies. They've
Right.
all come from our ecosystem. They all were seed stage companies, very small
Hmm.
companies. Then they became larger before they went to list. So वो जो
Hmm.
pre IPO stage है, somewhere around there is what we call as late stage. And the early stage are smaller companies that we invest in, right? So when we invest in a company, our typical ticket size is 5-10 crores initially.
Hmm.
And then we
Hmm.
keep ramping up investments in those companies to increase our size of investment, etc. But हमारा
Right.
पहला चेक 5-10 crore का होता है.
Hmm.
The late stage companies, the check size that they are raising now is 50 million, $100 million. So very
Hmm.
different. And therefore, what happened in 21, 22, this whole funding winter and the liquidity that got sucked out, is that
Hmm.
companies that had raised 50, 100, $200 million
Hmm.
are actually suffering today.
Hmm.
Because वो पैसा raise करके they've burnt all most of that money, if not all. Most of that is gone.
True.
Now, for them
Yeah.
to maintain those growth rates or to even go
Hmm.
towards profitability, they need more
Hmm.
capital. अभी
Hmm.
उनके लिए कैपिटल तो फॉरेन इन्वेस्टर ही दे रहा था ना, वो 100-200 मिलियन डॉलर का चेक हमारे पास तो है ही नहीं इंडिया में, और
Absolutely.
बहुत कम है, ऐसा नहीं है कि नहीं है, बहुत
Yeah.
कम है.
Yeah.
But the
Right.
foreign guy is gone. He's not deploying
Hmm.
capital now. So that
Hmm.
section of technology companies and late stage companies that I call them are really in a very tough spot. Most of them.
Hmm. Okay.
Early stage, the
Yeah.
ecosystem where we invest, which are smaller companies, early stage, अभी अभी चालू किया है, 1 साल 2 साल 3 साल हुआ है, business अभी grow हो रही है, etc. So we catch
Hmm.
them very young. At
Hmm.
this stage of the ecosystem, things are not too bad. Why they're
Hmm.
not too bad? Because they never were so good in the first place. जो वहाँ
Right.
पे लेट स्टेज में जो वैल्यूएशन में फ्लफीनेस दिखा था, वो अर्ली स्टेज में
Hmm.
इतना था ही. So therefore,
Hmm.
the correction in this part of the market is
Hmm.
very limited. Unlike the late stage companies, where we've seen correction between 50 to 70% in the larger companies.
Absolutely.
Here, the
Yeah.
correction is between 20 to 50%, depending on which company, etc., etc. So it's far better.
Hmm.
Uh, this is our view on this year, the current year. Everybody wants to understand what we are thinking is happening in the market.
Right.
So first thing is, as I already covered, early stage deals remain significant,
Hmm.
especially in some few sectors, and we are focused on those sectors. The investor base it keeps expanding. There's enough and more. We are seeing domestic HNIs, domestic family offices, and now domestic institutional investors who are
Hmm.
looking at, who are not just looking at, but who are deploying capital in the early stage companies. So even
Hmm.
our investor base has grown in that direction. So we got far more HNIs, family offices, and now institutional investors who are our investors in the fund. Um,
Hmm.
Late stage startups are prioritizing profitability, like we discussed, cash conservation, avoiding burn. So
Hmm.
I think this is a year, 23 is a year when a lot of things will get stabilized. I do not
Right.
see this ecosystem turning and starting to run. Truly
Hmm.
hope not. I'm completely biased here because we are now making investments at this stage. So when you're
Hmm.
making investments in the market, you don't want the market to run up. You want the market to remain steady.
Right.
So I think this is a great time to deploy capital. I think another
Hmm.
6 to 12 months is this opportunity. And at Equanimity with our fund, we are making
Hmm.
the most of it, deploying capital at this time. So yeah, Nilesh, that is all that I had
Hmm.
for the ecosystem. Maybe
Hmm.
I can share something about our fund, etc., what we do, or we can
Yeah,
wait for
in fact,
get
that
some
was the next
Q&A.
question I wanted to ask. That this the presentation was very good. We learned a lot about the startup ecosystem in India. You are at the early stage startup companies where you invest, and if there are investors, because I see a lot of investors who like what you mentioned, and I somehow I don't agree to that, where they invest through their friends because they must be not in that industry. Maybe
Right.
they are businessmen, and someone is into IT, and they tell, okay, I'm investing here, you also invest. Okay. If they are in similar kind of industry, it's fine, and they invest in a very, very crude manner, in fact.
Right.
So how can equanimity actually help investors, and are there products which
Yeah.
are available? What are the opportunities which we see where
Yeah.
investors can invest through equanimity?
Fantastic. See, I think what you just highlighted in Lesh is actually a big. I think it's a big problem for investors.
Hmm.
You know, just because my friend has invested in a company, I will also invest in that company. And I
Hmm.
think this mindset, we have to realize it comes from the listed
Right.
markets. राइट, वो
Absolutely.
किसी ने मेरे को बोल दिया कि ये स्टॉक अभी ये भाव पे लेना है, अच्छा वो फंड मैनेजर है, वो मार्केट में बैठा है, तो वील आल्सो डू इट, राइट? एंड इट कम्स
Yeah.
फ्रॉम देयर. सी द
Hmm.
प्रॉब्लम विद द स्टार्टअप इज स्टार्टअप
Hmm.
इकोसिस्टम इज यू शुड नेवर डू दैट. बिकॉज
Hmm.
लिस्टेड मार्केट में अगर आपको पता चला आपने गलती किया है ना, वहाँ पे एग्जिट है. यू
Absolutely.
कैन गो टुमारो एंड सेल, यू
Hmm.
कैन रिकवर फ्रॉम योर मिस्टेक. यहाँ
Hmm.
पर कोई लिक्विडिटी नहीं है. आपने एक बार
Hmm.
इन्वेस्ट कर दिया तो एक 3-5 साल तक तो यू हैव टू बी पेशेंट एंड रियली हेल्पिंग द कंपनी ग्रो.
Right.
So I think that is one thing that I always advise people not to do. Just because my friend has put money, I will also put money. I think this is not, you're not doing it the right way. Is my opinion
Right.
on that. And
Hmm.
I was an angel investor
Hmm.
for 10 years, from 2007
Right.
to 2017, before I started the fund. So I've been there,
Hmm.
done that. I've made the same mistakes, when I
Hmm.
started. So
Uh,
so the piece of advice is don't do that. Second
hmm.
is early stage investors or HNIs, our friends, people who we move around with, they tend to
Hmm.
invest in startups very in a very ad hoc manner. अरे वो अच्छा
Hmm.
लगा तो मैंने 5 लाख का रुपया डाल दिया, अच्छा लगा तो मैंने 50 लाख का चेक काट दिया, right?
Hmm.
I don't think that's a right way to build a portfolio. A portfolio, like we all know, is a very thought out structure, and there's a lot of science that goes into it in the way you put together companies in a portfolio. So I
Hmm.
think that is where even I myself stopped investing as an angel investor, and I
Hmm.
quit my full-time job at Templeton, and started Equanimity, so that we can bring systems, processes, structure that we see in mature markets, developed markets, that we see in larger mutual fund and institutional investor categories. We could bring all of those learnings and those processes and systems into early stage as well. And I think it's worked out fantastic for us. So at this
Hmm.
time, we are in the midst of our fund two, which is the second fund. The
Hmm.
first fund was raised in 2018, when
Hmm.
I stepped out and I said, okay, I'm going to be doing this full time. So I put in
Right.
money, my own personal money, and all the investors in Fund One are friends and family. There's no third party, or not many third party investors. It's predominantly us.
Hmm.
So the first fund was 125 crores, and I think we made, good investments. We made 14 investments from that capital, and we've already sold out 4 companies and returned capital back to our investors. So we are one
Wonderful.
of the very proud to say we're one of the few investors on the street
Hmm.
who, in the early stage, who's had this
Hmm.
discipline of exiting companies. By the way,
Hmm.
all our 4 exits were in 21, which is the year when
Hmm.
everybody was falling over each other to deploy capital.
Right.
Crazy bull market था, तो उसमें हमने very consciously we decided whatever we can sell out and is good to sell out, just exit those positions. So that has worked very well for
Hmm.
us. For
Hmm.
the second fund, our target is to raise anywhere between 500 to 700 crores
Hmm.
at this time. We already have firm commitments of 250 crores. Of
Hmm.
this 250 crores, we've already started making investments. So we
Hmm.
made 3 investments already in the public domain. And I can share details on those companies. Our
Hmm.
target is to make 7 to 8 investments every year over a period
Hmm.
of 2.5 years. Create a portfolio of 20-25 companies, and
Hmm.
we are 3 partners in the firm, assisted
Hmm.
by 5 associates and analysts. So we
Hmm.
have enough and more bandwidth to really manage these kind
Hmm.
of investments. We
Right.
have a very respected and robust and involved advisory board. And that
Hmm.
advisory board has the likes of Dr. Mark Mobius, who's on the board,
Hmm.
Mr. Arjun Malhotra, who's the co-founder of HCL,
Hmm.
one of those 6 founders of HCL group. He's invested in the
Hmm.
fund as well as he's on a board. We have Mr. Vijay
Hmm.
Advani, who used to run once upon a time in the late 90s Templeton in India, and then
Hmm.
he was co-CEO of Templeton Global in the US,
Hmm.
and then he ran TIA CREF, which is a a couple of $1 trillion, a large asset manager in the US. And also he was part of IFC, so he's on a board. So we have, five people on the board. Each of them bring tremendous value to our portfolio investments and to us as well. So yeah, so the right
Right.
way to invest with us will actually be to participate in the fund. We are a SEBI
Mm-hmm.
registered Category 2 alternative investment fund, AIF. And as I said, we've raised 250 crores. We are raising the balance as we speak.
Mm-hmm. Okay, wonderful. And what is the fee structure like for the AIF if anyone wants to participate in the AIF? Okay.
Yeah.
What would be the fee structure like?
A fee structure is a pretty standard 220 that we have, which means, and this is industry standard. 2% is the management fee, and
Right.
20% is a share in the profits. The way
Okay.
this works is that this. So when any investor comes to us and gives us 100 rupees, right?
Right.
वो जो 2 rupees a management fee, that 2% comes from that
Mm-hmm.
100 rupees only. There is no separate over and above that anybody has to pay us. And
Mm-hmm.
when we return the capital back to our investors, we are not
Mm-hmm.
returning 98, we are returning the entire 100.
Mm-hmm.
So,
Okay.
which means investors
That
are
is
really not paying us
against the.
2% fees that is taken out. It's 2%
Mm-hmm.
fees as working capital because वो उनको वापस मिल जाता है, right?
Okay.
Then
Mm-hmm.
there is a 10% hurdle rate.
Mm-hmm.
To make it very simple,
Mm-hmm.
10% compounded return जब तक फंड का बनेगा, वो पूरा
Mm-hmm.
रिटर्न इन्वेस्टर्स को जाएगा,
Okay. Mm-hmm.
right? When the fund starts making returns about 10% on a
Mm-hmm.
compounded basis, that is when the 80-20 between the investor and the fund kicks in.
Okay.
So I
Mm-hmm.
think it's a very fair and very good structure, and it's not just us, by the way. It's an industry-wide phenomena
Right.
because investors here are investing in illiquid securities and taking more risk than listed markets. It's only
Mm-hmm.
fair that investors get all their capital back
Mm-hmm.
and at least a 10% compounded return before they start sharing any upside with fund managers.
Okay. And what is the tenure of this fund? Is there any
This is a 7-year fund. 7-year
7 years?
fund, yes.
Mm-hmm.
So the
Okay.
way this works, Nilesh, again, it is, people just hear 7 years and draw conclusions. But
Mm-hmm.
the way we work is
Mm-hmm.
for the first 2.5 years is when you give us money. Our
Mm-hmm.
investors give us money. So like I
Mm-hmm.
said, the 250 crores जो हमारे पास commitment है, उसका 15% we already called. So
Right.
15% of that has been sent to us.
Mm-hmm.
Now, and the way we work is that every 6 months we call
Mm.
for roughly 15%. It's a thumb rule, which
Right.
means over 2.5 years, the whole 100% will be invested by the investor. And then
Mm-hmm.
when we get capital from investors, we don't keep the capital; we deploy it in companies immediately.
Mm-hmm.
And so therefore, the portfolio that gets constructed, it doesn't get constructed in one day. It gets constructed over 2.5 years. So
Okay.
every year we'll make 7-8 investments. Next year we'll again make 7-8. ऐसा करके वो 20-25 कंपनी का portfolio बनेगा. So when
Mm-hmm.
we return the capital back to investors is whenever we sell any company. So like
Mm-hmm.
in Fund 1, I just told you we've sold 4 companies. All
Mm-hmm.
the money that was received from selling those companies has been returned back to investors.
Mm-hmm.
We don't keep it. So the return for investors is going to be all along, the period of this fund. Whenever we sell anything, money goes back to investor.
Yeah, the
It's
structure of
not
the
just
AIF, also, I guess.
yes, yes, yes.
Yeah. Yeah. Mm-hmm. Okay. And one more thing I wanted to ask you, and I think this will be one of my last questions because you've answered most of it through the wonderful presentation.
Thank you.
It's basically, what is this co-investment opportunities? A lot of investors are co-investing, in fact.
Right.
So, what is it all about, and do you help investors participate in it?
Right. I think this is one of the most important facet of investing through a fund is that what
Mm-hmm.
we do is that we have a team in place, we have the systems, processes, and filters to figure out good companies to back. Now,
Right.
when we figure out a company and we invest in that company, quite a few of our investors come to us and say, can we, we invested in your fund, can we also invest in that company directly?
Right.
Right? And it is
Right.
not all the companies. Some company, for example, Nilesh,
Mm.
someone from the fintech area
Mm.
is our investor. तो उसको
Mm.
fintech समझता है. So when we
Mm.
make any fintech investments and he likes it,
Right. Right.
then this investor says, what, I'm invested in the fund. Can I also invest directly into that company which the fund is investing in? So it's
Mm.
a win-win kind of equation there because the investor gets access to some very good deals that he understands.
Right.
We get access to little more capital than we are able to deploy in that company.
Mm-hmm.
And I think co-investments is a big feature of at Equanimity, as a fund, is that we
Mm-hmm.
allow our investors to participate. Of course, there are thresholds and all that. Otherwise, you got to keep that balance. So how much you can deploy as co-investment is linked to how much you put in the fund in the first place. So we
Mm-hmm.
got all those filters, checks and balances. But yeah, we love co-investments because co-investment, the other benefit that we derive is that people who understand that fintech example that I gave. Now, this
Mm-hmm.
fintech guy who understands this company will be able to help that company grow. So
Right.
he'll be helping the fund as well, right? And for him,
Mm-hmm.
it is great because he is now getting to deploy capital in a company that has been screened by us. We picked that company among thousands before we've given them capital. So it's a
Mm-hmm.
win-win kind of situation, yeah, and we encourage it.
Mm-hmm. No, wonderful. In fact, Rajesh, it was highly informative because this is a very complex space where little information is available, and there's a lot of excitement. So
Yes,
excitement without knowledge is little dangerous, and
absolutely.
that's
Well
where
said.
I
Very well said.
feel, so when investors need to venture into this kind of a space, I'm sure we require someone to handhold them
Right.
and work on behalf of the investors. So Rajesh, it was wonderful. In fact, the important thing is there is a huge government push which we are seeing in the startup ecosystem. I think
Right.
the industry is bound to grow. What I see, I'm sure you are the one who's actually into it. So you have seen the kind of environment which is getting created, and as wealth gets generated, investors, you will I see a lot of domestic investors also who would like to participate in this space in a more active
Yes.
way.
Very
So
true. Very true.
thank you, Rajesh. I'll hand it over to Unnati. She's got a few audience questions.
Sure.
Unnati.
Thanks, Nilesh.
That was a very intriguing session, Mr. Sehgal. I think your views have given us a lot of perspective on this entire startup ecosystem.
Thank you.
I'll move
Thank
to
you.
the audience Q&A, sir. Uh, the
Unnati,
first
there's
question
one
from the
from your side also. Huh? There's one question from your side also.
yes, sir. I had one question from my side, which
Yeah.
I was waiting to ask you,
So we'll
because I
start
am
with
also
that.
quite sure, sir. I'm actually
Yeah.
also quite intrigued with this entire ecosystem, so I always keep discussing it with Nilesh, sir. Uh, with all the inputs that you've given, one question which I had is that how should one define their exit strategy while investing in the startup, and what are the challenges that an investor faces while defining
Yeah.
that exit strategy?
Yeah, I think this is an excellent question, Unnati. I must say that this is the biggest challenge for startup investing, by the way. And you rightly caught it because we discussed about how to find out startups, what do we look for in them, how do we create a portfolio. वो सब हमने बात किया, exit का बात अब तक नहीं हुआ. So well caught. I think exit is among the most important factors for making while you make early stage investing because the asset class by definition is completely illiquid. There is no liquidity, right?
Right.
And therefore, actually, there's a joke, by the way, that goes, and I have a cartoon of that also, which I can share later. But the joke goes like this. So how does a VC enter a room? And the answer is by keeping an eye on the exit. So that's how we make our investments as well. When we enter any investment, one of our eyes is always on the exit. Okay, इसमें से exit कैसा मिलेगा? So, in fact,
Mhm.
if you look at our process, which I was sharing earlier, one of the key features of our process before we make an investment decision is what are the likely exit possibilities for this company in 3 years time, 4 years time, 5 years time, and we actually these are all guesstimates, right? But they're all intelligent guesses.
Mhm.
In fact, I told you earlier that we've had 4 exits from our first fund. All
Mhm.
four of them were sold to other corporates, right? They're
Mhm.
all strategic exits. It is not that some big guy came, gave us money, and we exited, and now there is no big guy, so there is no exit. We've not had those exits. Our exits have been to other corporates or other larger companies for whom the companies that we had invested in were valuable. Right? And
Mhm.
and I think that is the best way to exit. It's the most difficult way to exit, but you get the maximum value out of your investments because you're selling it to somebody who values what you're selling, right? So yeah, so I think it's a good question. Exit strategy extremely important for us. As I said, uh, uh, how we will exit is part of our IC note. Before the investment gets approved, there's a conversation on exit kaisa hoega.
Right. Absolutely, sir. Uh, Moving to the next question from the audience. How to derive the valuation of a company in the initial investment? So, what are some basic guidelines to arrive at a valuation?
Wow, uh, that's a tough one. So, you know, I've been an investor in listed markets since 1992 till I was at Templeton till 27, so nearly 25 years. Uh, and in that tenure, I've been involved with listed markets, private equity, angel investing, and now I'm involved with VC. And I can tell you from my personal experience that the way we value companies that are larger companies, larger businesses, is very different than the way we value startups. You cannot use the same lens to value these two asset classes. They are extremely different. And I think without getting into technicalities and complexities, I think simple way to understand this is when we value a large listed company, uh, there is 80% science and 20% art, right? Because see, the whole valuation science actually started somewhere in the 1950s, right? When some of the papers got published, which CAPM model, all those discounted cash flow, all of those things are actually relatively new, by the way. वो खाली 60-70 साल पुराना है. It's not very old. And unfortunately, that science has not got disrupted, or nothing new has come our way to help us understand how to value businesses. हम लोग भी वही यूज कर रहे हैं जो 30 साल पहले MBA में हमने सीखा था, आज भी वही यूज हो रहा है, right? It's no change. So I think when you value any business or any asset, it's not an easy task, as easy as it may appear, and it may lull you into thinking that it is बहुत simple है. Nothing about valuation exercise is simple. But when you come into valuing early stage companies, the exercise becomes even more challenging, because यहाँ पे ना, as I was sharing earlier, there is no track record, there are no financial statements, there is no 5-year projections, कुछ है ही नहीं. The industry may also not be there sometimes. You have to do crystal ball gazing literally to figure out कि अच्छा ऐसा हो सकता है, which means it's 80% art and 20% science. So it's extremely challenging. And as I said, it's not a forum where we can delve deeper, but this is a subject that's very close to my heart. On how do you value companies both in listed and unlisted markets.
Right. Absolutely, sir. Moving to the next question. What is a secondary buyout and how does it work?
Uh, So if I understand, where you're coming from, secondary buyout is actually when somebody buys out your stake in a company,
Okay.
right? So you are so sometimes the entire company is sold out, sometimes only your stake in the company is sold out, and both of them may qualify as secondary buyouts. As I said, there are different mechanisms of exiting for investors like us who get in earlier. The best way to exit is to sell to another larger business, right? But when we sell our stake to larger investors, then we call that they are buying us out. So it's a buyout.
Okay. Right. Thank you so much, sir, for all these valuable inputs. It was an amazing session. Uh,
Thank you.
on behalf of Cedrus Wealth Partners, I would like to thank you for making the time to grace this event. Thank you so much, sir. And we will return next month for all our viewers with a new speaker and a new topic. Thank you so much.
Thank
Thanks,
you, Rajesh.
Unnati. Thanks, Nilesh bhai. It was, and thanks everybody who's listening to this or will listen to this later. It's been a pleasure. And if I can add any value in your understanding of early stage companies, startups, VC funds, etc., feel free to reach out. Nilesh bhai is our contact here, so he's the right person to reach out to. All right. Thanks,
Definitely.
everybody.
Thanks,
Bye.
Rajesh, and have a wonderful weekend.
Thank you. Thank you. All of you too. Thanks. Bye bye.
Thank you. Thank you.
Bye, sir.